on November 12th, when the CPI inflation number for October came in at a series low of 0.3%, we put out a note saying too low to ignore. And we cemented the rate cut call for December 5, saying that if there is a will to cut, this is the best window to cut, because it doesn't get better than this when it comes to the inflation backdrop. And the Reserve Bank of India Monetary Policy Committee is indeed an inflation targeting central bank. And then came the GDP growth number at 8.2% on Friday evening, and we put out another report saying it's too hot to ignore. I am very fondly reminded of economist Keynes' comment that when the data changes, I change my conclusion, and that's precisely what happened on Friday evening. You're right, we have now flipped our call. We are looking at a dovish hold tomorrow by the Reserve Bank of India Monetary Policy Committee. The reason that we have moved away from the call for a cut to a dovish hold is essentially in the backdrop of a very, very strong GDP growth number. To highlight to all the viewers, Reserve Bank of India's own estimate for this GDP print was 7%. We were looking at about 7.4%. So at 8.2%, the GDP growth surprised all of us materially on the higher side. With this, there is a need to revise the growth forecast up. We are now looking at financial year 26 GDP growth to average at about 7.2%, 40 basis points higher than our previous forecast. And I think the RBI is going to follow suit when they reevaluate these numbers. Not to take away from this the benign inflation picture, the 0.3% in October CPI was indeed below expectations. And in fact, November is also going to be below 1%. What that means is that financial year 26 CPI inflation is probably going to average close to 2%, and RBI will have to revise down their inflation forecast, which is right now at 2.6%. So as you rightly mentioned in your opening remarks, this does look like a coin toss, really. You have a very, very benign inflation outcome and a very soft trajectory going forward. You have a red-hot GDP growth number much above what you were expecting, and that will push you to revise your growth forward. But for a forward-looking central bank who is still dealing with some amount of uncertainty on the trade deal, as you mentioned, I think it makes sense to have some room available and sound dovish. We are looking at a pause. We are looking at a dovish pause with the stance being neutral, which means that we do expect them to announce, let's say, non-rate measures to make sure that bond markets are comfortable and liquidity infusion takes place. So we are expecting OMO purchases as well.
All right, that's a lot to cover. I want to start by just understanding how often does this happen, where you and I believe two other economists also flip their decision, and what that says about this particular RBI rate cut decision being just different.
Right. So I think divergence of views is at the heart of opinions, and all economists are opinion makers, so to say. So I'm not too worried about how many people turned and how many people stuck ground. There is a solid case to be made on both sides. And let me remind you what the previous MPC member said in his monetary policy minutes for the August policy, that was by far one of the closest MPC meetings he has seen. I think we are just continuing that tradition by making it look like a close call. So it's not unusual. It's not that rare. It's just that the data on both sides is quite divergent.
Okay. Is it the data that's divergent, or is it the interpretation of whether the data is reliable that's divergent? Because you mentioned the inflation number, 0.3%, the GDP number, 8.2% when estimates were at 7.3%, and it's that surprise, that big jump of almost to 1%, that has made people say, hey, how reliable is the data on both sides? Is the RBI considering that the inflation data out there is accurate? And is it also considering that, hey, and a lot of economists have already said that we need, the way India comes up with its data is anyway going through a bit of a change. It will see a change in February. But how much of this actually factors into the decision?
See, we are all data users. The credibility of data or comments on credibility of data is neither our prerogative nor something that monetary policy makers take into account. If we have the data which says that India grew by 8.2%, that is a policy input. I understand where your question comes from with respect to single deflation versus double deflation. Lower deflator could be probably pumping up GDP growth numbers. But the fact of the matter is, and I think there was a beautiful retort to some of the comments being made by IMF, by Secretary Saurabh Garg from Ministry of Statistics and Program Implementation, making it quite clear that you may question the credibility of data, but the fact is that about 45% of GDP collection still happens on volume basis, which does diminish the role of deflator pumping up GDP growth rate. So aside or moving away from the questions on credibility, this is a data that policymakers will use as is. And it does tell you that India grew much faster than what all of us were thinking. Not only that, as I mentioned, forward-looking central bank will also look at what's happening to growth and inflation going forward. We do think that inflation probably inches up from here. We are looking at next financial year inflation average close to 4% at about 3.8%, so getting closer to the target, and growth to also slow down a bit. So probably growth has peaked and the best inflation prints are behind us. To be worried about credibility of data while undertaking monetary policy decision making, I don't think that the RBI would fall into that camp.